Hey everyone, Ryan here. And this video is going to be my analysis on the E-mini S&P and Nasdaq futures contracts. I realize I am hopping on here a little late. Currently it's 9:09 and the opening bell is 9:30. Hopefully I can get this recorded before the opening bell. But in the future, I'm going to have these recorded on the weekends so I can have them uploaded and available to you before Monday's London session. But for this one, let's get into it. And before we start, let me just remind you that I am not a financial advisor, nor am I giving out any financial advice. This video is for entertainment purposes only, and these are going to be my opinions. You should not use anything I say to make a trade on your own. So on screen, you see we have the dollar index on the monthly chart. Yes, the monthly chart. And I'll zoom in here to show you why this is significant. You can see back in April, we have a big move up and it left the fair value gap here. And for the first half of this year, we've been trading down into this fair value gap, but you can see that none of the monthly candle bodies has closed in this gap. We wicked down there a few times, but all the bodies have stayed above. So this shows me that this gap here is going to be a strong support level. And should price go up, I'm not entirely convinced it's going to be bullish, but if the dollar is going to be bullish and it goes up, I expect it to go into this inefficiency here above the marketplace. And we'll go into the weekly chart to show you why I have that highlighted. Okay, the blue here is going, this is the monthly fair value gap, and this is the portion I highlighted. So on the weekly, we have this inefficiency, but I've refined it to this wick and this upper wick here. This is going to be the exposed part of that inefficiency. So if price should go up, I do want to anticipate price reaching into this area here. Going into the most recent price action, we can see that we have another weekly fair value gap here. Currently, we are trading in it, and I want to keep my eye at this level to see whether we're going to go above or below this weekly fair value gap. So right now I want to maintain a neutral bias. Don't want to be overzealous and be bullish right away. But so far it is looking rather strong. I would like to see price go above. And let's go down to the daily for some more detail. Here, and let's zoom in just on the most recent price action. So remember, this blue is the monthly fair value gap. The two red lines are going to be the weekly fair value gap that we're currently in. On the daily above the marketplace, we still have a daily fair value gap here. And then above it, we have relative highs. So if price should trade up, I want to see price go up into this inefficiency here. And I don't want to see this as a stopping point, but rather more like a speed bump. I want to see price retrace back down and use this weekly fair value gap as a support level to bounce off of, and then eventually go and take out the liquidity above these relative highs. So this is if price should see this panning out, I would start being bullish once I see support on this weekly fair value gap here. So this is the dollar index. Let's hop into the indices. Before we actually go into each individual one, I want to draw your attention here. On the right side, we have the dollar index. We just talked about that. But I want to draw your attention to the upper left and middle charts. The top one is going to be, the top one is going to be the E-mini S&P here. And we're going to have Nasdaq on the middle one here. Okay, now it's correct. And I want to zoom in just on the month of July here for both. And you can see that on the E-mini S&P, we have a higher high on July 27th, but Nasdaq did not create that higher high on the 27th. So here we have some divergence on the highs here. Since we're neutral to slightly bullish on the dollar index, I want to be neutral to slightly bearish on the indices. And seeing the S&T divergence here, this is a good sign. And I want to see it maintain this divergence. I don't want to see Nasdaq take out this high before we start seeing downward movement. Okay, now let's go into E-mini S&P. And we'll start on the weekly chart. So on the weekly chart, we see that it's pretty much been bullish ever since the September contract started trading. It's just been going up and up. But if we're going to be neutral to slightly bearish on the indices, going into the most recent price action on the weekly chart, I'm looking at this inefficiency here below the marketplace. So if we start seeing if we start seeing bearish signs, my eye will go to here, and I'll be looking for price to draw into this area. Let's go into the daily for a little bit more detail. Okay, and go over here. So remember, this blue shaded area is going to be that weekly fair value gap, and these two turquoise lines are going to be this daily fair value gap here, which overlaps the weekly fair value gap. The purple dashed line is going to be the middle of that daily fair value gap, and I've extended the lines to the left. And you can see on the left side these three red candles. That middle line, the consequent encroachment, touches the top of this down candle. So this is the beginning of the order block. So should we see bearishness on ES? I would expect this consequent encroachment to be a very strong key level, because it's the high of the order block, it's the middle of the daily fair value gap, and it's the bottom of the weekly fair value gap. But in short term, right now we're trading up here. I have the consequent encroachment for this wick drawn out as well. I don't want to see price close above it. It's okay if it trades above it, but I don't want to see the daily candle close above this consequent encroachment. And I want to see strong repulsion down towards these relative lows on the daily. Going into the hourly and zooming in just a bit. So this bolder dashed line, this is that daily consequent encroachment. The thinner line here is going to be this down candle, the middle part of this down candle here. This is going to be the mean threshold of this propulsion block. Right? Remember, this is going to be an order block near another order block over here, and this makes it a propulsion block. So the middle portion, I don't want to see price close above it. You can see that we already wicked above it, but I do not want to see closure above this mean threshold. And I want to start seeing repulsion down and take out this sell side here that we created at midnight. I want to see movement down into these relative lows below the marketplace here. But we're still kind of consolidating. I don't want to be overzealous and say we're bearish just yet, but I do want to keep an eye out for any signs. Okay, let's jump into the Nasdaq now, and we'll start on the weekly as well. Same as ES, it's been going up and up ever since it started trading the September contract. So no signs of bearishness yet, but should we have any, I am keeping my eye out on this inefficiency here. And I've narrowed it down to the bottom of this candle's wick, because this is the exposed area of this BISI. So if price does draw down, I want to keep an eye and anticipate price going into this area here. Going down to a daily and zooming in just a bit. Remember that blue box right here is going to be that weekly fair value gap. I've drawn out with these turquoise lines the daily fair value gap between this candle and this whole inefficiency here, and I have the consequent encroachment drawn as well. Same as ES, I'll extend the lines to the left, and you can see that the consequent encroachment goes just above the bodies of these down close candles. So again, we have the same thing. We have the order block here, we have the weekly fair value gap, and then we have the daily fair value gap. So there's a lot of confluences here. Should price draw down, I would expect the consequent encroachment of the daily fair value gap to be a very key level. So this is at 15,367-ish. Currently it's trading up, and on the daily we see that there is a volume imbalance here. So between this candle and this candle, there has been no body closure in between here, only wicks. So there is a volume imbalance inefficiency here. I could expect price to go up and trade and work in this area, and then it could even go further up. I have the consequent encroachment of this wick drawn out as well, but after hitting these levels, I'm looking for downward movement below and looking for it to come down into these inefficiencies below the marketplace. Let's go into the hourly for a little bit more detail. Okay, so here we see that volume balance right here. So, and we have relative highs. Looks like price could draw up, taking out liquidity above here, fixing this inefficiency, and then I want to see price move below this low here with displacement. I want to see elongated movement downwards, heading for the sell side below these relative lows, below this low here, into this weekly inefficiency. So this is my outlook for the indices this week. I'm not saying that everything has to happen all in this week. Please keep in mind that we do have non-farm payroll this Friday, so anything could happen. But I just want to keep an eye out, keep a neutral bias. I'm slightly bearish, slightly bullish on the dollar index, and I'm just looking out for signs. So if you like this content, please give me a like, hit that subscribe button, turn on that notification bell so I can get this video out to you each and every week, and that will help support me in a great deal. So thank you very much for watching this video, and I'll see you next week.